Chapter 4, you learned how to apply the rules of debit and credit for the asset, liability, and owner's capital accounts. In this chapter, we will apply these rules to revenue, expense, and withdrawals accounts. First, let's quickly review the rules of debit and credit for an owner's capital account. An owner's capital account is decreased on the left side, the debit side of the account, and increased on the right side, the credit side. The credit side shows the normal balance of the account. The rules of debit and credit for accounts classified as revenue, expense, and withdrawals are related to the rules for owner's capital accounts. Now let's look at the normal balance and the increase and decrease sides of the revenue, expense, and withdrawals accounts. Accounts set up to record business income are classified as revenue accounts. Revenue accounts increase owner's capital. Thus, revenue accounts increase with a credit and decrease with a debit. The normal balance side of the T account for revenue accounts is the increased side, the credit side. Expense accounts record the costs of goods and services a business uses. Expense accounts decrease owner's capital. Thus, expense accounts increase with a debit and decrease with a credit. The normal balance side of the T account for expense accounts is the increase side, the debit side. A withdrawal is an amount of money or an asset the owner takes out of the business. The withdrawals account decreases the owner's capital account. Thus, withdrawals increase with a debit and decrease with a credit. The normal balance side of the T account for the withdrawals account is the increased side, the debit side. When applying the rules of debit and credit to revenue, expense, and withdrawals accounts, use the same steps you learned in Chapter 4 for asset, liability, and owner's equity accounts. Begin with analysis. Identify the accounts affected. Classify the accounts affected. Determine the amount of increase or decrease to each account. Then apply the rules of debit and credit. Determine which account is debited and for what amount. Determine which account is credited and for what amount. Let's apply the rules of debit and credit to revenue, expense, and withdrawals transaction. On October 18th, Beacon Advertising prepared an advertisement for Roadrunner. Roadrunner will pay Beacon's $75 fee later. To complete the transaction, we will walk through each of the steps. 1. Identify which accounts are affected. Advertising expense and accounts payable Beacon Advertising are affected. 2. Classify the accounts affected. Advertising expense is an expense account, and accounts payable Beacon Advertising is a liability account. 3. Determine the amount of increase or decrease to each account. Advertising expense is increased by $75. Accounts payable Beacon Advertising is increased by $75. 4. Determine which account is debited and for what amount. Since advertising expense is increased and it is an expense account, it must be debited for $75. 5. Determine which account is credited and for what amount. Since accounts payable Beacon Advertising is increased and it is a liability account, it must be credited for $75. You can see from the completed T accounts how to apply the rules of debit and credit to a transaction involving an expense account and a liability account. Let's look at another transaction. On October 20th, Roadrunner bills City News $1,450 for delivery services. As we complete the transaction, try to anticipate the answer to each of the questions regarding the transaction. 1. Identify which accounts are affected. The accounts receivable City News and delivery revenue accounts are affected. 2. Classify the accounts affected. Accounts receivable City News is an asset account. Delivery revenue is a revenue account. 3. Determine the amount of increase or decrease to each account. Accounts receivable City News is increased by $1,450. Delivery revenue is increased by $1,450. 4. Determine which account is debited and for what amount. Since accounts receivable City News is increased and it is an asset account, it must be debited for $1,450. 5. Determine which account is credited and for what amount. Since delivery revenue is increased and it is a revenue account, it must be credited for $1,450. Did you apply the rules of debit and credit correctly?